CT traders, welcome back here. In this video, I want to share one of my very powerful ICT trading strategy with you. It is called the ICT reversal pattern strategy, and this particular strategy is going to be very handy for those of you who are taking positional trade or don't have time to be on your screen almost every day. So if you're taking trades in the higher time frame, then this particular video is going to be really helpful to you. So let's get into it. What exactly is reversal in trading? Reversal is when price completely turns direction from its current directional movement. So if price is moving upward and it changes direction to the downward, it's called a reversal. And we want to take advantage of when exactly price is going to turn direction, and then we take that trade. So you're going to back so many pips using this simple strategy. So what exactly is reversal according to ICT? This is what ICT defines reversal in ICT mentorship PDF. Reversal is when price moves the opposite direction from the current direction it has taken. And when price reverses direction, it indicates that market makers have run a level of stops and a significant move should unfold in the new direction. The liquidity pool just above an old price high and just below an old price low. Now, there is a liquidity pool once price have completely taken off that particular liquidity level, it changes direction. I'm going to show you everything in detail. And I mostly trade this strategy in either the 4-hour time frame, or the 1-hour time frame, because it's less noisy. And if you are starting out in trading, this should be your kind of strategy. This should be your kind of strategy because it's less noisy. You don't have to stress yourself. You will just wait for price to change direction and then you take advantage of it. So let's take, for instance, this is a classical example of an uptrend. All right, price is moving and then pushing up again, having this kind of movement. All right, so a reversal comes in when we see price completely turning direction from this movement and you see it giving you a sign that it wants to go down. All right, so we want to take advantage of this kind of price action and have very big trades and have a very long time position on our trade. So look at this. Price has been coming, break of structure at every point. At every high there is a break of structure, breaking structure above here, breaking structure above here, breaking structure above here, breaking structure above here. The most important thing about an uptrend is to create higher highs, and we will put our eyes on the higher low because the higher low is basically this point. I don't want to go into the very basics. And for those of you who are starting out with ICT concept, I have a dedicated YouTube channel where I'm teaching ICT concept in a sequence. The videos are arranged in a way that you will learn everything according to how ICT arranged them. This is the YouTube channel. If you come to playlist, you're going to find ICT core basics and then ICT intermediate and even the advanced level ICT. So there are 14 videos right here. You can come over here. The link to this YouTube channel will be displayed in the description of this particular video. So as price is coming, this should be your focus. At every point price pushes up to this level, price pushing up to this level, you're going to pay attention to the higher low, because at that point where the higher low has been raided, that is where reversal happens. Look at this. We have swept liquidity above here, and then we are crashing down into this area. So this is a shift in market movement, which is also known as shift in market structure, while this is a sweep of liquidity. And that's exactly what ICT is saying. Looking at the definition, it says the liquidity pools just above an old price high and just below an old price low. Pretty much easy and straightforward. So look at this. We have this liquidity sweep above this guy. All this place is filled up with liquidity in form of buy stops, and we raided this liquidity and we are crashing down to shift structure because there is no more liquidity for us to grab. This is the kind of movement we want to take. I want to teach you how to take this kind of movement and then get the maximum kind of reward you can get. So if you've heard people saying I've made 10x, at X, whatever, position size, is basically using such kind of entry pattern. You will get a very, very good risk to reward, but you have to be patient with this kind of strategy. Same way, if price moves in the downward direction and it's tired, it changes direction again, taking out the lower high, and then it gives you an upward movement, just like you can see right here. You see, this is a shifting structure reading the liquidity below here, sell stop liquidity now in this regard, and it continues in the upward direction. The market does not move in one direction forever. That is what you should know. The market does not move in one direction forever. It has a turning point, and that is what we call the reversal pattern strategy. So let's look at what we have here. I've already delineated everything so we can have less stress. This is the 1 hour time frame on USD CAD. You can do it on any asset, whether crypto, whether you're doing it on futures indices or synthetic indices, or you're using it on stocks, whatever the name of the asset you're trading, you can easily use this strategy. So let's look at this. Price has been coming. But let's start from here. So let's start from here. What we have here is that price has been moving down, creating a low, creating a low, creating a low. All right. So all this while you are watching this price action as a bearish movement. And look at what price did. Price actually came to this area, trading into this level. I love ICT because everything can be connected. Trading into this bullish order block, and it reversed direction in this point. Can you see this? The low was created and then shifted structure just above here. This is a market structure shift just above here, reading the liquidity below here. All right, this is the kind of pattern you want to be trading, leaving you with a breaker block, right above there. Let me type it for you. Leaving you with a breaker block for you to take your trade. Price will always give you that institutional reference point you can use as your entry level. Look at this. Are we taking the trade blindly? No, we are not taking the trade blindly, because we are actually taking the trade in discount, premium and discount. If you still remember that, premium and discount. Look at how price came back into this particular breaker block, and then we push up to that level, reading the liquidity above here, taking out these guys, reading the liquidity just above here. Now liquidity resides from the body, right? So if you're taking your profit, you must know this, to even higher than the wick. All this level, you can see liquidity right there. So you should have some certain level of understanding. As price is coming over to this level, you should know that liquidity can be completely swept here and price can decide to turn direction. So these are the kind of movement you want to be. Anytime I see this, especially with this kind of displacement and the struggle in coming down, I will be happy to take the trade. And that is where the understanding of volume comes in. If you use this indicator called volume, you will see the displacement volume, and then you can use that for your own advantage. Let me show you that, how to use it. If you put this indicator, you can come to settings. I would love to use the same color. I don't like using different colors because it's quite easy to identify. So look at what price did. All right, as it was coming, look at the volume of this reversal. Can you see the volume of this reversal is quite above the one that was coming? As it was coming closer to this level, the volume completely reduces. Look at it. Can you see the volume reduced at this point? And then the displacement that comes with the shift in market structure came in very strong, showing you that there is a volume coming in. And this is the wonder in this simple strategy. You will wait for the price to return into your institutional reference point of interest, especially this breaker block. Look at the retracement that was coming. The momentum that was used in this is higher than the momentum that is in this movement. Can you see? All right. So as you're watching this, you should pay attention to the kind of volume that comes in. Volume indicator is one of the best because it doesn't show you a false price movement. All right. So look at this as it was coming the lowest area. Once it starts printing this, as it touches this guy, this breaker block right here, which is your entry, the moment it touched that guy, look at the volume. It actually increased. All right. It actually increased. And then look at these two candlesticks that were coming in the downward direction. They are supposed to have higher volume than these guys. I hope you're learning something very powerful here, because this will help you a lot in trading. Look at this. Price was actually coming, right? Look at this. These two candle, 1, 2, right? And then price was coming down. Look at the volume of this price coming down, which is telling you that this level has been the best level for you to take trade. And then boom, the volume increased. I'm not teaching you how to trade with volume. I'm just giving you how this smart money show their presence. If they are present in that movement, you will see massive displacement. Price will quickly leave that level with such a huge movement. All right. So price moved away from that level. So that's basically what you should be trading, such kind of movement. And as price raided the liquidity above here, what next did we see? We saw price trying to reverse again. Where is the reversal? Right here. We have another movement, sweeping liquidity above and then shifting market structure. Look at what price did after shifting structure. It came back and gave you an entry, a beautiful entry on a breaker. This black candle is your breaker, a beautiful entry, and that is why I love to enter at the tip. It's just for you to adjust your risks and then take advantage of that kind of movement. It gave you a very decent movement, raiding liquidity below this guy, trading again into this breaker block, and then liquidity below here, giving you another shifting structure here, reversing again as price was coming, raiding liquidity below this guy. It's all about the game of liquidity and reversal as ICT defines it right here. Liquidity below here, and then all this area is filled with liquidity. Price reversing, shifting structure at this point where I put this MSS, market structure shift. As price was coming back, it came back into the area and then it moved up again to this level. Moving to that level, creating a liquidity sweep above here. Price always pushes above the previous high, just like ICT defines it. The liquidity pool just above an old high, price high, and just below old price low. That's the simple concept behind this trading strategy. So as price traded above this liquidity area, all right, and then quickly crashing and having this market structure shift right here. Can you see? I'm using one time frame, don't forget, just one time frame, and it is enough for me to trade with this kind of simple concept. I don't need to look for buyers because this movement is exactly what the smart money are doing in this higher time frame. If you find it, it's quite easy to use it. So price raiding liquidity just above here and then crashing down into this level, leaving you with a very big breaker block. All right. And that is where the knowledge of ICT comes in. When you have a very big breaker block or another block, you can simply use the middle of that breaker block or the other block for your entry. It is called the mean threshold. The mean threshold. Don't forget that. The mean threshold right here. And you can see the middle of the candlestick was where price actually came back to. Look at the retracement. I wanted to show you this retracement. After shifting structure, it came back and then it gave you movement, trading below this liquidity area. All right, grabbing liquidity and then giving you another entry, just reversal, moving in a direction, reverses, just reversal, another movement, sweeping liquidity below here, shifting structure here, coming back to retest this particular bullish breaker, and then it push up again. Another one here, giving you a mitigation block here, and entry here, pushing down to this level. You can go on and on and on. Is a very, very decent way to take your trades. I have another one right here marked as this. You can see price has been coming. Price has been coming all the way from that level. Look at how price did not give you a shifting structure at any point until at this point. Price shifting structure. If you should either zoom in or do something, you're going to see that price actually raided a liquidity below here. Liquidity below here. It's all about the game of liquidity. Even at this point, you can see price shifting structure, giving you an entry, and then boom, it pushes up to that level. You will always see this happening time and again. Shifting structure, pushing up, shifting structure, coming down, shifting